High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hi traders, welcome to Traders Talk. The purpose of Traders Talk is to give you the truth of trading by interviewing top traders who trade for real and give you different perspectives to trade the markets. On the Smart Money Framework, we also interview partners like brokers, software providers from time to time who can give you the necessary support to overcome the obstacles you have in trading and help you achieve consistent trading performance. Today's guest on Traders Talk is Chris Tubby. Now, Chris Tubby is a seasoned financial markets trader and educator with over 40 years of experience in commodities, foreign exchange, and derivatives trading. He has worked with major institutions, including banks, hedge funds, and trading houses, gaining deep expertise in both proprietary and client-driven trading. He's even gone through the 9/11 crash, where he was the market maker, and also interesting fact is 30% of the volume driven on commodities was from him. Known for his practical, no-nonsense approach, Chris is passionate about mentoring the next generation of traders. He regularly shares his insights through seminars, training sessions, and educational platforms across the globe. Chris, welcome to the show.
Hi, thanks very much for inviting me. I'm really looking forward to today's session.
Yeah, I was really looking forward to today's session. So much of history behind you. You've been in the markets for over 50 years now. That's a long time. You've seen all kinds of seasonalities and everything. Before we dive a bit more deeper, Chris, I just thought it'd be good for the audience just to understand a little bit about your background. Like how did you get into the world of trading? How old were you when you started? What triggered your interest? And do you do other things other than trading full time?
Trading's just my passion and my life, really, and it has been since when I got into the markets when I was 17. So I was going to become an accountant because I love numbers, but then I got offered a position working for the London Commodity Exchange, like the softs markets, coffee, cocoa, sugar, rubber. And wool as well, actually, thinking about it. And it was just something I thought, well, I'll give it a go. And after 2 days, I just thought, wow, this is just what I want to do for the rest of my career. And I've been fortunate to do that. So trading wise, yeah, I mean, I've got algos that do some of the trading for me these days as well, but I still like to be active, keep involved in the markets. An algo can probably mimic about 85% of what I do, but they can't get that last 15 because it's just live price action that I'm looking at that's going to give me that trigger. Again, as you mentioned earlier, I love to train others. It's my second passion. Just don't tell the wife, she's the third one. And it takes up a lot of my time, but I just love it. I'm a people person. I love people anyway. So being able to match up trading and meet new people all the time is just amazing. And hopefully I can help them to turn trading into a career for them as well. And then I do mentoring almost 6 days a week, daily newsletter I put out in the mornings as well. So yes, I keep busy. I always, say I only sleep 5 hours a day. And then the other day I thought to myself, actually, I work 19 hours a day. I always sort of never even thought of it that way round before, but and of course, my customer base is global, so I'm doing early morning sessions in one part of the world, late afternoon and evening sessions sometimes in others as well.
I guess that's what happens when you're so passionate about something. You're just not aware of time itself. You're so much in the zone. Amazing to hear that, Chris. Chris, I just wanted to know, so how old were you when you started and what triggered your interest actually to get into this world of trading?
Yeah, so as I say, I was only 17, but once I got into the commodity exchanges, I mean, I didn't realize, but they'd only just really sort of started off in London as well. So I got in at the very ground level of everything. And I mean, in the early days, all the directors sat down there because the markets hardly moved, and then the market started to pick up pace, and all of a sudden, all the directors are like, "This is too much for me." So they all went back to the offices, and they employed all these young lads to do the trading for them as well. And sort of, I got in at sort of seeing all these young lads down there, and I just thought, wow, this is like being at college, but I'm actually getting paid to be here, and I got on well with the guys, and yeah, it just all built up from there, really.
Very
I went
interesting,
to a
isn't it?
very small broker, and then from a small broker, I went to what was then one of the biggest trade houses in the world. So I just want to say I didn't do 30% of all commodities. I only did 30% of up to 30% of the daily coffee volume, which I was senior trader at 22. So it was a great age to sort of be at that level.
Amazing, Chris. 17 when you started, 5 years time, you became a senior trader. Amazing. It looks like it was just meant for you, really, trading. And
I
yeah,
was just a natural. So I was very fortunate there. And yeah, it's strange. I mean, we had another guy there. He was academically, he was brilliant. I mean, he could sit down and do an A-level paper in probably 30 minutes. Whether it was any good or not, I couldn't tell you. But he did them. But you put him up on the board to write down the prices. He had no idea whatsoever. He just looked like, you're going to put that trade up. What trade? So okay, so trading wasn't for him. But yeah, so I mean, I just took to it straight away, and I loved it. Never panicked. I mean, even sort of, I was 2 weeks into trading, with this small broker, and the guy that was training me up, my boss, he took the day off, ill. So whether he was ill or just wanted to see what I could do on my own, I'm not sure. And one of the guys in the office, he come on, he said, "Oh, buy 500 deck at markets." So I've done that for him, given the execution and all that. And about 5 minutes later, the phone rings again, and he's sell 500 deck at market. And I'm 2 weeks into trading here, so I'm like, whoa, whoa, whoa! I'm like, explain to me what's going on here. And he's like, oh, he said I shouldn't have bought the 500. It was a stop loss order. He said I thought I was getting a better price. And I'm like, and I've only just started. Oh my God! So I said, okay. I said, leave it to me, and I'll get out of them. So I spent the whole afternoon just taking out a little bit at a time, little bit at a time. As I say, but I'd only been trading for 2 weeks. But I spent the whole afternoon getting out. I mean, we took a small loss, but if I'd have just got straight out of them as the moment he told me to do it, then it would have been a much bigger loss.
interesting, isn't it? Wow, how all these events shape us up and start us into the world of trading. Interesting that you shared about the academic guy as well. Tells you that there's not really any big, correlation there. You get people from all walks of life coming into trading, and the ones that you least expect the most become the best traders. Understanding all of this, Chris, I just want to understand a little bit now, going in a little bit into your style of trading. So you did mention a little bit over there. Maybe if you can tell us a bit like what type of trader are you? Are you a swing trader, scalping trader, position trader? What would you say you are? And you do a lot of intraday trading?
Yeah, I mean, I definitely not a scalper. I'm not a fan of scalping at all. For educational purposes in online and all that, I mean, it's okay to so people can see you actively trading rather than sitting there and being patient and waiting for your setup to actually work. But yeah, I do quite a lot of intraday. I will do a little bit of medium and long term as well, but again, if I'm doing that, so if I'm going into swing trading, it's usually through strategies. If I'm going into longer term positions, I'm going to use options. But then the rest of it's just intraday, and a lot of it's based on technicals that I use, along with, just sometimes just a little bit of gut instinct. But I set my prices, and I let the market come to me. If I don't get the trade on, then I don't get the trade on. But I trade all asset classes, so there's always something for me to be involved in.
Very nice. I like the part where you said about setting the prices and letting the market come to you. So that ties in nicely to the next section on your trading, specifically on the entry side of things. So how do you actually enter your trades? Is there like a concept that you have on all the trade setups that you take?
Yeah, I mean, to be honest, sort of my trading strategy hasn't really changed that much over the decades. Tweak it now and then, but that's about all. And again, tweaking it more for, because you've got to stay with whatever the market conditions are, the volatility. So that's where I'm tweaking it slightly. But, it's the old saying, is it? If it's not broken, don't try and fix it. So for me, I've got what works for me, and that's what I stick with. So I do a lot of analysis and all that. So I've always got a macro outlook on what I think is going to happen on anything you want to talk about. And then after that, then it comes down to sort of doing my analysis. And then, depending on the market that I'm trading, depending on the market conditions, the volatility will depend on how I approach trading that particular asset that I'm going to trade. I trade a lot of oil, some gold, and not so much currencies. I do trade currencies, but it's got to be a really good setup for me to want to get into the currencies, and obviously indices, and yeah, I mean agricultural products, treasuries, stirs, uh, pretty much anything that moves to a degree. I mean, one of my biggest passions is oil for trading, and I create strategies for that, because with the strategies I can actually control the volatility in the trade.
Interesting. So what does your typical trade entry look like, Chris? I know you did mention you would set limit orders and wait for the market to come to you. So how would that look like? Is it like you look at some zones or some horizontal support, or how? So what is the
Yeah,
base?
so technically, I, I start with a daily chart, and then I'll narrow that up, and I'll end up with a 30-minute chart. I use candlesticks for my analysis, putting my trend lines on. I also add pivot points. I'm a big fan of them. We as pro traders have been using them since the 80s. So again, they work so well. And Fibonacci levels. And I use three different charts. So that's my candlesticks. And then I use Heikin-Ashi. So Heikin-Ashi will be just for market sentiment. And then I use point and figure, where I'm just looking for sort of horizontal rejection levels. So I'll go through all of those in the morning. I'll work out my analysis. If I'm very close to any particular prices that I want to be involved in, and it fits with my sort of my bias, my macro outlook, then I'm going to be very interested in going into them. I must say I'm overall a bear trader. I love to sell a market much more than
Right.
buy it, which is against what most people do. But I mean, I will buy a market. There's nothing going to stop me if I can smell money. But at the same time, I'm much more comfortable being short in the market. I love the saying, the markets take the stairs up and the lift down.
Yes, we've
And they just watch these markets sometimes.
it's
And
just,
then,
yeah.
there's certain other things I look for in technical analysis, sort of long candles, I call them, when you've had big moves. And then because when the market reverses, it tends to create a void around those prices. So there's some good opportunities for them. So again, they're different types of setups. So
Interesting, Chris. You know what? I really like the part where you're using all this confluence of factors, and I think that is one main takeaway that the traders got to take, where you're using this combination of the daily, the 30-minute charts, time frame, and then you're using all your trend lines, pivot lines, Fibonacci, using a Heikin-Ashi point and figure. That's quite interesting, actually, that you're using different types of the price representation. Is there a reason why you do that? Looking at Heikin-Ashi point and finger and candlesticks, what are you really mainly looking from them? Is it like a common point or a common story that all of them are saying and where smart money is coming in?
Yeah, I mean it's very rare that you'll get them all line up because with Heikin-Ashi it's more momentum, it's more trend following, whereas with point and figure I'm actually looking to go against the trend rather than with it, unless it's a breakout trade. With candlesticks, I'm looking for longer term support resistance with the dailies, and then I'm bringing that into a 30-minute chart. And with 30-minute, then I'm looking for sort of where the other opportunities are. I trade a lot around the pivot points, but not the pivot point itself. I tend to think of that as sort of neutral, almost fair value. I want the market to go up and either test the R1, R2, the resistance levels, or come down to S1, S2, the support levels. That's much more going to interest me. And the thing I like about Heikin-Ashi is I you can't analyze it in the normal way that you could a candlestick, even though it looks like a candlestick. But what you can do is you can use it just to see market sentiment. It's got so much more consistency to it than a normal candlestick will have.
Interesting. It's very nice. Thanks for sharing that. In terms of, yes, later on when you share your charts, we can take a look at this a bit more closely and the
Yeah.
audience will like that. I mean, one more thing on the entry. I mean, do you scale into your trades? Is that kind of your entry or trading philosophy as well?
Oh, absolutely. Yeah. Unless it's news driven. If it's news driven, then I'm just straight into the market and I'll go in full weight. But otherwise, that is really my style of trading. Because I've been trading and obviously for a long time, but I've been training guys for a long time as well. And I always used to say to the guys, probably about 85% of your trades are going to go against you before they're going to go for you, if they're going to go for you. And if that's the case, so why not take advantage of that? Why rather than go all in at one price and then watch the market come down and go, oh, I wish I could buy some more, or I wish I could buy some more. So I tend to break my orders up. If I can't watch it, then I'll just put three resting orders in at three different prices. So if I've got a support line, say here, I'll put my lowest level to buy will be very close to that line. And then I'll work out how far away from that I'm willing to come into the market. So that's going to be my entry level. And then I'll come in with a midpoint as well between that and that. So I break my volume down into three. And I like to do that. And then when I exit, it's very similar, except I do it in much smaller size, just to ease out of it bit by bit by bit. And then I'll hold some back as well. So, because all I'm trying to do is just get decent averages getting in and a great average getting out as well.
Nice.
Because
Just
the other thing, if you wait and wait and wait, you can do, but it's so often that the market turns all of a sudden, then you're reluctant to get out because you've missed those higher prices. That little greed factor comes in. It's like, oh, why didn't I sell it at 92? Now it's trading 87. And then it's trading 80, and you go, why didn't I just sell it at 87? And it keeps going down and down, and then you can end up just getting stopped out. So. And then I'll trade around those positions as well. But that's really my style is just scaling in and out of trades for sure.
Chris, so that the audience can get a better, clearer understanding. So let's say you're shorting the market now. The support level is here. So, and you've got, let's say, one entry, maybe let's say 2 points below that entry level. So you will scale in as it breaks another level at the bottom of that. Is that right? Or do you
Right.
scale in?
Okay. So if let's take a resistance level up here,
Mhm.
92. So I'll have selling orders at 90, 88, and 86. Or I might have 90, 87, 83. It depends on the volatility, how wide I want to stretch those out. And for me, it's about maybe it'll get up to that level, maybe it'll just get through, get a little bit wicky and then come back down again where it's been rejected. But quite often the markets, because if it's a major level, there's going to be so much selling around there. What I don't want to see is it get close and then come away from it where it's been rejected early and I've got no position on. So I might end up only getting 30 or 66% of my position on. I may not get that one because it's quite tight to the major level. But then as the market starts to come down, then I'll come in and sell at a lower price to make sure I've got my full size on.
I got you. Yeah, I think it'll be a bit more clearer when they see it visually as well. But you're waiting for the pullback to the higher level, and then as it comes back down, then you start to scale in. If I'm getting
Yeah, it's not really a pullback. I mean, I've just got my level. If it comes up to here and I want to sell this contract, then I'm just layering in. If I've got the time, I'll actually sit here and I'll have it on my screen, and then I'll just keep feeding into it, just selling bits and pieces, 2s, 3s, 5s here and there until I get the size on that I want to accumulate in total.
Nice. Okay, good. And what would you say from memory? I mean, I want to come to the FOMC part of it. Just this one quick question on what would you say? Would you say from memory, what is your best trade to date so far? And what was your thinking behind your entry?
So there's a couple. One I can go back a very long time into my old coffee days because coffee went a little bit quieter. And it actually ended up being an FX trade because I used to take a lot of holidays. And then I was thinking one day to myself, I looked up and I thought, that doesn't look right. That, the dollar against the pound, so cable, it just, the dollar should be sort of worth more. So I went round to my bank and I converted all my sterling into dollars. And I went back to the market and I thought, you know what, if I'm doing that for me, I should do it for the company as well. But I thought, I'm a coffee trader. Okay, I could go into the gold market that was next to me, but how can I sort of get a dollar position? So I thought, so I phoned up the office and I asked if anyone was running the arbitrage book because we had arbitrage options, you name it, we had it because it was a very big company. And they all went, no one's running it at the moment. So I thought, oh, it must be losing money. So I said, oh, can I take it over? And they're like, oh, yeah, it's yours. Because now the loss is mine. So I was like, yeah, I don't mind. I'll wear it. And every day, all I was doing, I was just buying New York coffee, selling London coffee. Because then as a company, we had to go in and buy the dollars every day to finance the New York office part of the trade. And I built that up quite a big position. And then, cut a long story short, left it for a while. And then the dollar started to appreciate in value. And yeah, so it turned out to be a really good trade. And then probably more recently was, do you remember the regional banks in the US that started to fall, like Silicon Valley Bank and that?
Yeah.
Probably about 3 years ago.
Mm-hmm.
And I was looking at the short-term interest rates and they'd moved and they was pricing in that the Fed was going to cut by 60 and 75 basis points.
Mm-hmm.
And I was like, there's no way in this world they're going to do that because at the time inflation was still too high for them. And of course, these are just regional banks. It wasn't anything that was going to become systemic. So it was just about, bad management for some of the banks and such like. So I thought, nah. So again, so I put a massive trade on there. Well, for me anyway, I put quite a big trade on. And of course, the Fed didn't cut rates at all. So the September and the December that I was short of, they just come all the way back down again. So. And
Nice.
again, it was just a matter of being patient and just waiting for that to feed into the market.
Yeah, it's all about the P word, isn't it? I think we'll talk about that later, the patience, right?
Yeah, absolutely. Yeah.
Yeah, and in today's world, I mean, almost no one has got that. Everybody is quite impatient. But we'll come to that in a bit. So you talked a little bit about the interest rates and the FOMC. So that nicely ties into tomorrow's FOMC meeting minutes. So what's your thoughts about that? And with news like that, I mean, how would you enter your trades? What's your take on all of that?
Yeah, so it's the rate decision tomorrow. So they'll come out with that, and then there'll be the press conference afterwards. So the rate decision's gonna, it can't be anything other than unchanged as far as I'm concerned. There's too many policy changes with what Trump's doing that's still got to come in and feed into the US economy, especially the tariffs. But there's lots of other ones to go around with that. It's not just about the tariffs. Removing the undocumented, so you're going to take away a lot of the lower paid, deregulation. Then there's other areas like his new tax bills that he's pushed through, that's going to cost about $2.4 trillion over about 10 years. So, there's a lot there. And obviously, the levels of debt that the country is building up. I mean, not just America, but globally. I mean, world debt is around about $324 trillion. So I don't think that the Fed can do anything. Yeah, the earliest is going to be September, and it may even have to wait until December, because they've got to wait for everything that Trump's done to feed into the economy first. And even going back into December when he started talking about his policies, I nicknamed it sort of Trumpflation. Because basically every policy he was coming out with was had the potential for that. And even though until recently we'd seen oil prices going lower, obviously with Israel attacking Iran and vice versa, that squeezed up the oil prices up to sort of $77, $78. They come back a bit now. So a bit of the pressure's off there again, but so that's going to push up the price of gasoline at the pumps for the Americans. So yeah, so there's not much positive, and even though the last inflation data come out very very good for the US, it that was stripping out food and energy. So when you put the food in, food still went up 0.3% last month.
Interesting. Chris, that's an astounding
And
number.
sorry, just sorry, I don't want to forget is watch out for the dot plot tomorrow as well. That's the forecasting from the voting members on where they see the rates going, not just for the end of this year, but next year, the year after, and in the longer term as well. So that's going to add some insight. That's going to be more insightful than what Powell's going to say, because Powell's pretty much can't say much at all.
Nice. Yeah. Okay. Yeah, that's a good one for the audience listening in on a dot plot of the voting members. That's an astounding number when I just thought about that. $324 trillion of debt. That's crazy
Yep,
amount.
it
Yeah.
is.
And that's what Ray Dalio keeps mentioning about it as well. And he keeps mentioning about it in the changing world order, and how this in the long term will definitely start to impact the countries. So that's crazy. And I know people are keeping an eye on that. And just a quick one before we go into the stop loss section. So when news like this comes out, does that affect the way you enter trades or not at all?
What for the FOMC?
Yeah. Or any kind of high news, like, unemployment rates, and all of that. Non-farm payroll.
Yeah, I mean, unemployment has been quite interesting recently. Well, for over a year now, probably I've been saying that the unemployment data in the US looks better than it really is. And the reason for that is because if you really sort of dig deeper into it, you've got permanent jobs going down like that, and they're all being replaced with part-time jobs. And obviously, part-time workers are earning less. They're at the lower end of the scale. And a lot of those guys are taking up 2, 3 jobs just to pay the bills. So that's what's really making the employment figures look better than
Right.
probably they really are.
And do you enter when the news comes out, or 30 minutes after, or you just stay out of the market when the news comes out? You don't trade on those days? How is that?
Well, so for the rate decision itself, I won't bother to trade.
Okay.
But for the rest of it, for when they hold the press conference, that's when I'm really interested, because it gives you lots of very quick, short opportunities to get in and out of the market. But I've also got a longer term position on for that, which is based around options.
Got you. I understand. Now, moving on swiftly to the stop loss side of things, I presume you use stops, right? And if you do, how do you actually place your stops? Is it based on purely technical levels, or is it fundamental, or if you don't use stops at all, then how do you exit from the market?
Uh, I do use stop losses. They are technically based for me, but they're not all just always technically based. They're going to be financial as well. Sometimes it's a combination of both. Sometimes it's more a technical decision. Other times it's going to be a financial. So when I'm going to go into a position, I work out what my average entry is going to be. I work out where my stop loss is going to be. And again, I might have multiple stop losses, so I might treat each entry as a separate order rather than just as an average. And then once I've worked that out, where I'm going to get in, where I'm going to get stopped out if I'm wrong, then all I've got to work out then is how much I'm prepared to lose in that trade if I'm going to be wrong. And then from that, I can divide that down, and that tells me exactly the size of my position. So basically, my stop loss and how much I'm prepared to invest in that trade gives me my sizing. I don't have to determine that manually.
So if I were to say, that means your stops are based on a combination of technical and money stops. Is that right?
Yeah, yeah.
Do you ever use a time stop? Like if it's taking too long than expected, then you start to trail a bit more tighter to exit. Do you ever use that or not really?
Not really. I mean, there will be the odd occasion where I'm in a position and I've expected the market to move and it hasn't done that. Over time, maybe I've been sitting in a position for 3 or 4 hours, maybe a bit longer, but it's not really moving anywhere one way or the other. Maybe there was a bit of news out that I thought that was going to move the market, but it hasn't. And for me, the moment I start doubting the position, I'm not that 100% confident anymore. I've already started to reduce. So I'll take off 25, 50% of that, and then just hope I'm wrong and I'm going to get some profit on the other 25 or 50%. But then if not, and it still doesn't move, then I'm out of the whole position. Regardless of whether it's a profit or a loss, it just means that I don't want that position anymore.
Going a bit deeper into that, so what is your risk management like in terms of when you get into the position and when you're in the position? So is it mainly based on percentage of your equity, or is it on a fixed contract size, which you have already measured beforehand, your drawdowns and all of that?
Yeah, I just deal in real money. I don't use percentages, because if I start using a set percentage as the month goes on, what I'm risking becomes more, because as I accumulate the market's money, if I stick at say 3%, 3% at the beginning of the month is going to be less than 3% towards the end of the month, because I've accumulated the market's money. So I don't do it that. So for me, it's about how much I want to risk in a trade, whether it's $1,000, $5,000, or whatever. I've worked out how much I'm prepared to risk in that trade first, and then, as I say, once I've worked out how many points that's going to cost me, then I know instantly what size that I'm going to go into that trade, and then I just need to adjust my size for each of the levels I'm going to go in.
So, yeah, Chris, sorry, I think it was a bit not quite clear, but I guess we got the main point what you were saying over there.
Yeah, I think you froze for a sec, but
yeah, I mean, the one thing I wanted to ask is, how do you determine that amount? Like, how much are you going to risk on that trade? 1,000, 5,000, 10,000? How?
It really depends on how confident I am, that how strong a level it is. If I've got confirmations coming through, so if I've got a pivot level that matches up with a Fibonacci level, maybe a triple bottom on a point and figure as well, then for me that's going to be a really high probability trade. If I've just got a trend line and it's been possibly broken earlier on, but it's holding in for the moment, then I will go in with less weight or less financially, because my expectations are still high, but not as high.
Nice. Thank you for explaining that. Now, the last one on this one was on this section was what would you say is the trade that taught you the biggest lesson in your life, your trading career?
It's probably a couple. One of them was when I was on coffee. I decided that the market had been coming off so aggressively that it was time to have a bounce. So I went quite long overnight. And the next morning it was due down again, which really surprised me. And so Stuart, my director, he came on the phone to me. He went, "I think you should get out of your position on the opening." So I did. But then in the morning, I'm like, no, I know I'm right. So I just basically I just bought even more than I was short overnight. And by the end of the day, it had rallied up. And the funny thing was, the next morning he phones me, "Dad, there must be something wrong with your P&L." So I'm like, "Why is that, Stu?" So he goes, "Well," he said, "it looks as though you made money yesterday and you couldn't have done." So I just went, "I worked really hard yesterday, Stu." So yeah, so I turned that one around. And then another one was in Italy, which was sort of, guys, know your trading system. So it come up to rollover, and I had to change some settings. And I asked my software provider what I should use, and they told me, but they told me wrong. But no problem. So, but that ended up costing me quite a lot of money in like less than 15 minutes on the opening. And then I worked out that there was something wrong, so I managed to tweak that, and then it was fine. So.
Oh wow, yeah, that's interesting, isn't it? Wow, that's crazy. The software provider gave you the wrong information. Now,
Yeah, yeah.
but yeah, I mean, but I guess all these things happen for a reason. And I think it shapes us to be a better trader, anticipate more things that can go wrong, and that's what gives us to become who we are today as well. So they're all blessings in disguise. And
Oh yeah, you learn so much more from losses than you do from your profits. I mean,
absolutely.
your profits, you just give yourself a little pat on the back, and okay, where's my next trade? But with a loss, it's like, okay, what happened there? Why did that go wrong?
Absolutely. I'm definitely on you on that, because I think those losses are the ones that teaches you the biggest lessons and how to make your systems a bit more robust and make you a more professional trader with absolute sharpness and focus. In terms of
Yeah.
target and everything, so let's go on the target section over here. So do you have like it's quite a popular one that traders usually ask is, do you have a predefined target for all your trades, or do you exit live on your trades based on certain parameters?
So my minimum risk reward is 2 to 1. So what I tend to do is I'll just put a small order in at 2 to 1 for my take profit. And then it's like a little alert, really, because when it gets up there, I'll get my fill come through, and I go, "Oh, okay, that's interesting. Now I need to pay a bit more attention." And then I'll start to reanalyze. If I'm long, then and it's up there, then again, I'm starting to think, okay, how wide should I gap out to start taking my profits and feed into the rally? And then I'll do that, and then what I'll do quite often is I'll keep scaling out of that, and I'll get out of 80% of my position, and then I'll hold the last 20% back. I'll place a stop loss somewhere in my zone of where I was taking my previous profits on the first 80%. So I know I'm guaranteed to get some decent money out of the trade, and then I'll just let the other 20% run. And there are times when I'll get more on the 20% than what I made on the 80%.
Very interesting you say that 80-20 rule, because when I was reading one of Jack Schwager's book on unknown market visits, One of the traders over there, I think is Amrit, I think, who talks about this 80-20 as well. He takes out the majority chunk of the profits at a certain target level is seeing. But just like you said, if he's seeing that it's a strong rally, he will let the last 20% move forward. And if I were to ask you why 80-20, Chris? Why not 50-50 or 70-30? Why 80-20?
Uh, it's a good question. I can't tell you. It's just what I generally do. I did one the other day, and I don't know how I did it, but I was long 35 spreads, and I sold out 31, and I ended up with only 4 lots left, and that was like my 80%. I was like, that doesn't seem right for like a percentage, but so obviously I'd had an extra odd one or two in somewhere, which I didn't mean to do, but. It was all right. So, and then, yeah, sure enough, by the end of the day, I mean, the spread had really rocketed up because a Trump comment, thank you, Mr. Trump. And yeah, so the last ones, I took a really good profit on those.
You know, the other thing, okay, you did mention about the quantified exit parameters where you're using 2-to-1 as a guideline. Again, if I were to ask you, I mean, why 2-to-1? Why not 3-to-1, which usually we commonly hear about? Why 2-to-1 or
Well,
not
because I
1.
start at 2-to-1, but because I'm scaling it out of my position, that can end up 3-to-1, 4-to-1, 7-to-1. Because I'm just scaling out slowly into the rally, for example, or the sell-off. Uh, uh, but that's it really. The reason I start with a minimum of 2-to-1 is because if as long as I'm right 50% of the time, I'm guaranteed to make money.
Got you. And that's why 2-to-1 and not 3-to-1, because 50%, yeah, I
Yeah,
got
so
you.
3-to-1 is more, but again, so with the markets are more volatile, I will step that out to 3-to-1, possibly even 5-to-1. So it depends on what I'm trading and how volatile it is. But my minimum is always 2-to-1. If I can't see the potential for a 2-to-1 trade, I won't take the trade on.
Great. And, you know, here's the last question on this one, which I actually got from one of the interviews that Jack does with the traders. One of the questions he asked them was, do you actually feel at peace when you exit most of your trades? I'm sure you do now because you're 50 years in. But there must have been a time on your journey where when you got all of your trades, you felt like, oh, I shouldn't have got out that early. I should have stayed in a bit more, or I should have got out much more earlier. Look at it, it made me bigger loss and all that. So how did you actually transit through that? And was it through reflection that now today you would say that you are absolutely at peace at every trade that you exit?
Yeah, I am at peace with every trade that I exit now because another reason why I scale out of my positions is because even though I've got 50 years trading, uh, I've got rid of ego, I've got rid of hope. They just don't exist for me.
Mm,
But fear and greed, even after 50 years, I've still got that battle going on in my head. I take the money, it's
mm.
like, wow, look, there's money on the table. I mean, when I'm in a position, I cover over my P&L because I don't want that temptation. And then on the other side, you've got greed sort of battling. So on one side, the market's going in my favor, and I've got fear saying to me, take the money, take the money. On the other side, I've got greed saying, not yet, not yet. And not, they're just fighting in the middle of my head. Uh, but by scaling out, I keep fear happy because listen, look, here I am, I'm taking some profits, and I'm keeping greed happy because I've still got some left.
Absolutely. That was nice way of putting it, where the fear and the greed are battling each other. And I guess it's over the time of experience that you've done in the markets that you've come into peace with both of them. We got a bit more time actually, Chris. I thought it'd be worth to maybe take a look at some charts before we
Yeah,
go
sure.
through a bit more of the psychology side of things. And also, audience listening in from Zoom and from YouTube, if you've got any questions to ask Chris, please do type it into the chat box. So for now, Chris, maybe if you want to share your screen, maybe we can take a look at some charts and maybe you can run through some of your setups over there. It's just sharing at the moment. Let's see. Yeah, now we can see. I guess everybody can see it. If you can just type it yes into the chat box, that'd be great. for us to know that you guys can see all this fine. Chris, yeah, go ahead. I think I can see this fine. Yeah.
So this is the mini S&P, and again, so here I'm sort of just looking at the opportunities. So this is the pivot point that I was mentioning earlier. For you of you that don't really know about the pivot point, so basically it's based on yesterday's data. So the high and the low, plus the open and the close, or sometimes just the close. Depends if you're using the classics or you're using different ones. And then it provides that pivot level, and then it will create a series of support and resistance levels as well. So I'm very keen on those. I like those. As I say, the pivot level itself I always consider to be quite neutral, but as you can see here, it found support at this level. This was sort of early Asian hours, but this is 2 days ago, not sorry, yesterday. And then it rallied up, big rally up. Again, it's got to pass the R1, but it couldn't sustain that. And then it rejected there by the end of the day. And then we've been coming lower again. Quite often during the early sessions, you'll find that the pivot level is quite sticky, and then it'll pick up pace, especially when the US is open. This is a 30-minute chart, so you can see that and the market coming off there, which is quite good because that works really well for my put options that I've got. But they're really for tomorrow night. So I'll just hold on to those. So now if I show you the same chart as Heikin Ashi.
Yeah.
Now this is Heikin Ashi, same time frame, same chart, but it looks a completely different chart. So if you sort of imprint that in your head for a second, and then I'll go back to a candle. Now you can see how sort of mixed up the reds and the greens are, but when you turn it onto the Heikin Ashi chart, it becomes much more sort of smoother with those moves. And the reason I like this one is, as I say, I don't draw any lines on this or do anything. I don't even look at the pivots on this, to be honest with you, because I use the candlesticks for that. But what I'm interested here is where I'm looking for is that consistency in the coloring, because it's just providing me with market sentiment. You got a lovely series here that's triggered off a major sell. Here you've got a nice build up of green candles onto a rally. So you can see that, you might still get the odd ones in between, but very small candles. So I don't really take much notice of them, but you get much clearer picture of where the market's heading or where market sentiment is in the market by using that. And then one that will seem weird to most of you guys is the point and figure. It's just made up of noughts and crosses, basically, a bit of tic-tac-toe. But, what it's showing is, again, what I'm looking for is when you're seeing some really good sort of like levels where there's a lot of resistance or there's a lot of support coming into the market. And you're not going to see loads and loads of signals all day long from these charts, which is what I like. I don't want to be hyperactive in the markets. I don't want to be scalping. That's just not my style. For me personally, I believe that scalping is something that you can do because you want to be active, you want to learn and all that, and I get that. But over time, you'll learn that there's no longevity in scalping as far as I'm concerned. It doesn't mean you can't make money, and good luck to you if it's for you. But, again, that patience for me, I'd rather just sit back and hold on to my positions and let the market play out and get a profit or a loss.
I'm totally in alignment with that one. Yeah. Much more, I'm always in a philosophy, Chris, and I'm sure you are in as well, which is do less, achieve more.
Yeah, absolutely.
So you know what? Wait for those big trades to come, just like a predator waiting for the prey. With patience, conserve your energy, and that is it. And once you get that, once it all fits in, you get in.
So point and figure works better on a ranging market than it does a trending market, I would say. And sometimes you need to adjust it as well. So as you can see here, you've got all these massive long little columns going through. This is Bitcoin, so of course that volatility. So sometimes this one doesn't make so much sense to you, but then you can go on and again come back to the Heiken Ashi. And then to me that makes a lot more sense.
I got you.
Yeah, it's very clean. Again, I can show you that as a candle. If you look at it as a candle, again, it's all mixed and blended. But if you go back to the Heiken Ashi again, just cleans it all up. You can see market sentiment very quickly, very easily in that.
Got you. Chris, just a quick question so that the clients get a good clarity. So you did mention on your entries. So is it when you enter it as it breaks through that pivot line and later on lower pivot lines, the support levels, what as it is, or do you is that the way that you're entering on the breakout of those on the way back down?
Yeah, I generally I want to see between 3 and 5 candles in the opposite color. Once I see them, that really gets my attention, and then I'm preparing to go into the trade. Again, if I can line it up with, say, a break of that pivot level, that's going to give me extra confidence to go into that trade.
Right. So a similar one is over here, right? About 5 candles in that opposite color, isn't it? After the rally up, then it comes back. Exactly, right? So that's the kind of, so that's good.
Yeah, that's a great setup because you've got a series of red candles. It's breaking through that pivot level at the same time. So just all you need is just to go that little bit lower. Happy to sell into that, and then if it breaks the candle the low of today, then I'll probably even add to that depending on what size I've gone in the first place.
And I guess your stop goes for the local swing, something around here. Would you say that, or is totally
Yeah, just above those, especially because that's sort of pretty much a triple top there or a quadruple top. So my stop would go in pretty much there.
Nice, very, very good. Thanks for explaining that. That's really makes it clear when you show the different charts and looking at one for the market sentiment and the other one for towards your trends and all that. So yeah, absolutely makes sense over here, Chris. Thanks for sharing that. I guess it makes it more clearer for the audience. If the audience got any questions, please type it into the chat box. The last section actually, Chris, before I go into that, do you have anything more to add on this side if you want to add in anything?
No. I mean, I'm fine on this. Again, all I would probably say is just be careful of your time frames, guys. Don't get sucked into all this 1 minute, 5 minute charts. You're going to get so many false signals. As pro traders, it's very rare for us to go below 30 minutes on the chart.
Right. Thanks for mentioning that. I guess yeah. I think it's just the impatience word, isn't it? Really, Chris. That's why people start to look at 1 minute, 5 minute, 3 minutes, and all that.
People are just so keen and eager to get a trade on, but you want to get the right trades on. I'd rather have one winning trade in a day than 10 trades and I've won on 6, lost on 4, and then I just want those high probability trades.
Totally in alignment. Now, in terms of the psychology side of things, so do you have kind of a pre-trading routine, post-trading routine before you get into the markets to get in the zone?
Yeah, I mean, so the first thing I do every morning, I provide a daily newsletter. So the first 2 hours when I wake up, I just read reports. That at the same time is feeding into me, giving me my macro outlook. It's giving me my bias for the day, or maybe for the week, or maybe for the month even. And then I'll get all that done. I publish my daily newsletter, and then I've got my bias. So then I'll go on to my charts. I'll start with my day charts. Then I'll go into end up with my 30-minute charts, look at the 3 different ones. I'm starting to formulate areas of support, resistance, where I see the good opportunities, going through all the different contracts that I trade. Because Overall, I've probably got about just over 30 different contracts that I trade. So, I'm looking at all of them. I'm not going to trade all of them at once. That's just the sort of different asset classes and various things within them. And then I'm just looking for the right opportunities to enter my trades. And, I'll put my prices in. If the market comes to them, great. If the market doesn't get to them, well, so what? Tomorrow's another day. I haven't lost money on the trade. I just haven't made any money on the trade.
Brilliant. I think that's the kind of mindset you really need to have, rather than, looking to jump into trades and force a trade in. I think that was really well put in there.
Yeah, I mean, it's so easy to see something that's not really there. So, I do my reports, I do my analysis, and then, when I'm sitting down and I'm going to start my day, I sit there, I take a deep breath, and I say to myself, Chris, are you ready to trade?
Nice. I like that. Okay.
Because I just need to clear my mind. I need to focus on the market and give it 101% while I'm sitting in front of the screen. And again, don't get glued to the screen all day long. I mean, just make sure you got your stop loss in if you're going to get away from the screen, but give yourself a break. Sitting there, you've just gone long and you're willing the market to come up. It's going to do what it wants to do. You can't change it. It's only if suddenly you get a change of view that you can get out of it. But otherwise, you don't want to be glued in front of your screen.
I mean, well said, Chris, because I remember all our beginning days when we got in, is like, you just feel like, you can force the market to do what you want, but you just can't. You just got to let it go. I think very well said over there.
It's draining, it's very draining.
So
You're looking at
true.
the market,
So
you go,
true.
oh, please go up, please go back up, please go back up. It's like, yeah, really?
Absolutely. Yeah, it brings us all memories of the early years when we all started. So you did mention a little bit on this deep breath and start training. So on that, do you do any kind of meditation practices or mindfulness or anything like that?
Not too much. I wouldn't say there's anything wrong with them for sure. And for you guys out there, if you struggle with your sort of the emotions and the psychological aspect, I would say, as I do all the way through all my courses with the guys, I recommend reading Trading in the Zone by Mark Douglas.
Very good book.
I've never found anybody that hasn't taken something of value from that.
Absolutely, so true. Trading in the zone, I can, yeah, Chris, you nailed it. I was telling one of the clients early on today as well. Trading in the Zone, every time you read it, you can always pick up something from it. What an awesome book.
Yeah, yeah. It's very well laid out. And yeah, I mean, it sort of pretty much nails the emotional side. Again, it's just a matter of whether you can control those emotions or not. I even through my courses, I've had guys I've identified that had such great potential, but they couldn't handle losses. And eventually they had to give up trading.
Nice. Chris, I think we're coming to the end of the show. I know I've ran a little bit over time. Before I go into the speed round, where I'll just ask one word and you can just give a brief line or two about what you think about those words. Just for the audience, because quite a few are asking, like, where can they find out more about you? So where would the place be? Maybe I can share my screen the time being. If you can tell me
I'll
where's the
just
best
stop.
place.
So there's my website, which is tradingfortomorrow.com. The 4 is the number 4 rather than FOR. There we
That's
go.
the one, isn't it? Trading for tomorrow.
Yes, it is. And there's a great cheat sheet in there as well. There's loads of free tips where it says cheat sheet. That's all about trading. There's so much. It's just a tab at the top there. And it's broken down into different sections as well. And if anyone's got any questions or they think of them afterwards and they want to reach out to me, my email is chris@tradingfortomorrow.com. And I'm always available, so reach out. I'll always get back to you at some stage.
Nice. Thanks for sharing that. And hopefully the team can put all those details in as well for reaching out to you. And The final thing is, yes, for everyone joining in as well, one small bonus from us as well, you'll get 7 steps to CTP.com as well. That's our free video series. You can overlay that with anything that Chris has talked about. So you can check that in your inbox. It will look like this, and you can watch it at your own free time. But in terms of tradingfortomorrow.com, that's the site details. And you can also email Chris as well at chris@tradingfortomorrow.com. The final thing, Chris, our speed round. So speed round, let me just ask you one word, and you just say in 1 or 2 lines what you think about that. I'll just choose 3 to begin with. So if I were to say the word strategy, what comes to your mind first?
Calendar spreads, butterflies, condors, boxes. I'm huge on that because I always tell people, but they probably don't ever believe me, but I've traded over 100 million strategies in my career so far.
Okay, the next one, edge.
Edge is something, it's different for everybody. It's just finding something that works for you, where everyone thinks that they've got an edge, but there's very few that do actually have that edge. It can be numbers of year in the market. It can be numbers of year in one industry, or it can just be you've found what works for you in the way of your chart setup, or your macro setup, and you're comfortable with it. It gives you the confidence to go into the market and believe in it as part of your trading plan. And again, trading plans are so important. And then keeping with that because you've got the belief and the confidence that it's going to work for you.
Nice. How about perfection?
In trading, I don't think there is anything such as perfection. There's always room for improvement.
Thank you. And the last one would be success.
Okay, so you can measure success in different ways. I mean, we all think money because money makes the world go round and all that. But if you ask me what was the biggest part of my success, I would say the fact that when my children were younger, I only used to work mornings. And so I used to go home, pick them up for the school, and the rest of the day was family time. So I had that magical, if you like, that work real life experience, and yeah, I mean, it was great because if you don't do it at the time, you can never wind the clock back for something like that. So for me, I'm more proud that I did that rather than just focus on just making every penny and cent that I could on a day and staying there all day. I must say that Monday afternoons were mine though. I did used to go and play golf, but the rest of it was family time.
Thanks for sharing that. That's so true, isn't it? Time is something you can never get back. Everything else, money goes,
Yeah.
you can earn it. But so well said. Thank you for that. Chris, it's been an amazing pleasure having you on the show today. And
Thank you for the invitation. I really enjoyed it.
thank you so much. Our pleasure is all ours as well. Thank you for sharing your great insights. I'm sure the audience has gained some really great value and insights today. As we mentioned, you can check out more about Chris on his website and also his email address that we've shared with you all. And we've come to the end, traders. As we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for
Yep.
now.
Good luck, guys. Good luck.